So it's March 10th, and it's the day after the stock market crashed. The Dow was down over 2,000 points. Oil cratered to $30 a barrel or so. The 10-year bond went to below 0.5%. What the heck is going on, Warren Buffett?
I told you many years ago, if you stick around long enough, you'll see everything in markets. And it may have taken me to 89 years of age to throw this one into the experience. But you know, markets, if you have to be open second by second, they react to news in a big time way. I mean, it's not like the market for real estate or farms or things of that sort. So you have to have a price, assuming, of course, we hit the circuit breaker yesterday. But it still was. It wasn't October 19th, 1987, but it was an imitation anyway. And the combination actually of the coronavirus and what happened with oil over the weekend. I mean, that's a big 1-2 punch.
Does this remind you of any other time?
Well, I've certainly been a fair number of times when panic has reigned in Wall Street. And October 19, 1987, and the period around it. I mean, there was panic. At the close of business on Monday, October 19th, most of the specialist firms, which were important in those days on the New York Stock Exchange, were broke. And the next morning, there was a check due to the clearinghouse in Chicago that didn't get there. And sometime late in the morning, a decision, I think Phelan had made the decision, we're going to stay open. But it was really close. That was, and of course, the financial panic. There were, you had 35 million people on September 1st that weren't worried at all about their money market accounts. On September 15th or 16th, they were all panicked.
What year was that?
Well, that was 2008.
2008.
Yeah, so 2008, and you literally had $3.5 trillion in money market accounts, which people regarded as the equivalent of cash or bank deposit. That was half the amount of all the insured bank deposits in the country, but these weren't insured. And literally, I remember it because all my friends had money market accounts. I didn't have one, but I was at a party, and a birthday party, and that's all they talked about. I suddenly became very popular. I was like a sports hero or something there for a very brief period of time. And of Hank Paulson, they had 175 billion of withdrawals in a few days. That's when I think anybody that knew what was going on panicked, basically. And Hank Paulson did the very gutty thing of using, I think, the exchange stabilization fund that was set up in the 30s because of the revaluation of gold. It had nothing to do with this, but he stepped in and $3.5 billion worth of deposits fell, or trillion, I should say, of deposits felt a whole lot better. If that move hadn't been made, because those funds held all the commercial paper, and you couldn't roll commercial paper, everything had come to a stop, and that was much more scary by far than anything happened yesterday.